So we are back again with another YouTube portfolio update, YouTube portfolio video, and pretty much the idea with this series is I take all of the money that is being made on this YouTube channel right here, throw it into a portfolio, talk about why I'm buying the companies that I'm buying, why I'm not buying certain companies, overall covering and tracking the progress of this portfolio over time, where we hopefully are able to grow it from just starting with a $100 deposit. And my ultimate goal is, reaching $100,000 in this portfolio, which I think would be absolutely insane. But just having a platform to talk about different stocks, again, stocks that I'm interested in, stocks that I'm not so interested in, and just seeing how it's going and showing you guys that you really truly can, start a small portfolio from nothing and grow it into a plus figure, portfolio and position over time, especially when you are buying, valuable assets over time and really seeing that good price appreciation. So far so good for the YouTube portfolio. We started this on December 22nd. It is now December 30th, 2021. This will probably be my last update for 2021, and then we'll get into the new year, obviously. But so far so good. Again, we start out at $100, and in just 8 days, we are now sitting at $102.74. We have had a total of a 2.77 return, obviously going from $100 to $102.74. For whatever reason, we've only invested $99.97. I don't know. We have a cash balance of 3 cents. Those 3 cents were supposed to get put in, but just never did. And yeah, you can see here we have my very first purchase was just evenly divided between Baba, Disney, Google, and Netflix. But in this video today, I wanted to go over a couple of different stocks. One stock that I already have in the portfolio, seeing what's going on with it. One stock that I'm considering and most likely will add to the portfolio. And one company that I'm probably just staying away from completely, but it is kind of interesting. So let's get into that. Also, in the first link in the description down below, we have a link to the Patreon for this portfolio and channel as well. Any money generated from the Patreon will be directly going into this portfolio. Also in the Patreon, I will be posting every single trade I make in this account as it happens, so you can get those live updates, in between videos and stuff. And then it'll be a place for us to discuss, stocks, finances, what we should buy next, what we are buying, what we're not buying, and talk about, financials and stories. So if you want to help support this channel, definitely check out the Patreon in the description down below. But with that being said, let's get right into this. So first up, I want to talk a little bit about NIO. This thing went absolutely insane today. This was up like 15% on the day. Really, really crazy. NIO is obviously a Chinese EV company. People are saying it could be a competitor to Tesla, but what a lot of people are seeing and saying is, look at what Tesla stock has done over the last couple of years. Obviously, it's gone absolutely parabolic. It's gone absolutely insane. EVs are, a space that people are very, very excited about and think has a very, very bright future and growth ahead of it. But there are obviously some issues with NIO as well. NIO is a Chinese company. Those have not done very, very well as of late and come with their own, fair share of risks. NIO is still not profitable, doesn't sell a ton of cars, is just kind of burning money, and NIO doesn't have Elon Musk as well. So while there are some similarities between NIO and Tesla, there are a lot of differences as well. But man, this thing was up 15% today. So I was trying to figure out exactly what was going on, and some of it is just that the market was really, really hot today. A lot of speculative companies, a lot of smaller cap companies. I mean, NIO's not small cap, but, smaller cap, relatively small cap, especially when you're talking like versus Tesla or something. A lot of these companies had very, very good days today. I know I do own a lot of. Recently in my main portfolio, I've been buying a lot of smaller cap companies, and I know my main portfolio had a very, very good day today. So part of it is just how the market was going overall, that these speculative companies that have been beaten down over the past 6, 9, 12 months kind of had a nice rebound today. So I think that definitely helped out NIO. But some of the good news that maybe made it have a better day than some other companies was, at least from Benzinga.com, is that the Chinese government apparently vowed to focus on consumption recovery and reduce some income tax rates. So, hopefully getting more disposable income in the hands of people. If you have a little bit more money to spend, hopefully people can be a little bit more speculative, a little bit crazier with their investments, but also maybe have a little bit extra money to buy an EV, to buy a NIO. And we'll see how this goes. Obviously, NIO is doing their thing, trying to, continue spreading and growing and seeing that rapid growth and revenue growth, and hopefully, eventually being able to work towards profitability and even if they see a fraction of the amount of growth and gains that Tesla has had, NEO, the company, and NEO shareholders will end up being very, very happy. But again, even though this one had a very, very crazy day and it was very, very interesting for me to follow, I have it on some watch lists. I saw what it was doing today. It definitely piqued my interest. Not really a company that I think I'm going to be adding to any of my portfolios really anytime in the near future. If you like them, that's your thing. I already think I have, enough kind of exposure to Chinese companies. And EVs is not something that really gets me too excited at this point. Another company that I actually am considering adding to the portfolio, which had a very good day today as well, but also got some good news recently, or just kind of some good coverage recently, not really like breaking news or anything, but just kind of a breakdown of what's going on, is Spotify. Now, I love this company for a lot of different reasons. One, I'm a Spotify user, and I love investing in things that I actually use and really enjoy the service and product. I've been on the Spotify app for years and years and years now. I have gone from being a free member to a premium member. I've gone from paying, the $5 a month as a student to now the $10 a month or whatever as a adult. And it's just really, really sticky. Once you get all your playlists, once you get all your music, once you get, your podcast, your shows, whatever, all onto Spotify, it's hard to get off of it. And once you start spending, once you get rid of those ads from the free to the premium version, it's hard to ever go back. I see it as very, very sticky. Obviously, having a subscription-based revenue model is very, very attractive as well. That's very easily scalable. And I do think that Spotify, in the terms of podcasts, audio, all things audio, is just going to be able to continue to grow and grow and grow into the future. And right now, one of the main issues with Spotify is the fact that they are not profitable. But as this article from Simply Wall Street says, loss-making Spotify expected to break even in the medium term, which is a great sign. So they do say here that the $45 billion market cap U.S. company posted a loss in its most recent financial year of 581 million euros, which is even more in terms of dollars, and at a latest trailing 12-month loss of 120 million euros. It has been shrinking the gap between loss and breaking even. So again, we're getting closer and closer and closer and closer to breaking even, and then obviously eventually profitability as well. And we see all the time with these huge high growth companies that are burning cash. Once they're able to reach over profitability and cross over, if you are invested in the stock at that time or anywhere near that time, that's where you see some crazy gains. That's where you see some absolutely massive gains. Now, Spotify has had a good couple of years, obviously. Maybe some of this is already priced in. Maybe even a lot of it is already priced in. But still, being able to get to that profitability mark is going to be a big, big day for Spotify. So according to 24 industry analysts covering Spotify technologies, the consensus is that break even is near. They anticipate the company to incur a final loss in 2021 before generating positive profits of $98 million in 2022. So the company is predicted to break even just over a year from now. Now, obviously, they say working backwards from analyst estimates, it turns out that they expect the company to grow 66% year on year on average, which is extremely buoyant. Obviously, that is a very, very high bar to set. Will Spotify be able to reach those numbers? We'll have to wait and see. I mean, I hope so. It sounds a little crazy. It sounds, really, really optimistic. But obviously, these numbers are based off that. So if Spotify is not able to reach these 66% per year growth numbers, then it will take them a little bit longer, or potentially a lot longer, depending on how much they miss, to actually reach profitability. But this is a very, very exciting thing to keep on your horizon. Obviously, I know Spotify is a company a lot of people know about, a lot of people use, a lot of people love, but also it's really, really big in the stock trading communities, since it's such a big holding of like Cathie Wood and ARK and all that stuff, and it's made a lot of people a lot of money over the past couple of years. So this is a stock that I do expect to own at some point in the near future. Honestly, I get paid, the YouTube money comes in on the 21st of every month. So, January 21st area, if things are still looking good, if Spotify's at a level that I'm, excited about purchasing at, I could definitely see myself throwing at least a little bit of money into Spotify. Now, obviously, this YouTube channel is still very, very small, so we're not going to be making a ton of money at this point. So it won't be like a huge position or anything, but, I still think it's something good that I think can make money. And if we're going from 100 to 100,000, even making little profitable plays here and there can still be very, very good, and just getting a position going. So Spotify is definitely a company I can see myself owning at some point, and that I am very, very excited about. But finally, the last company that I hold, and I do want to talk about, is Alibaba. This is a stock that when I made the first portfolio video talking about the 4 companies that I was buying, Alibaba's one that I believe in very, very strongly, and I think it could potentially be, of the 4 plays, the stock that makes us the most in the long run, at least percentage-wise. Now, I'm very excited about all the companies. I think Disney, Google, and Netflix are all going to be long-term winners and pretty massive winners. But holy crap, Alibaba, to me is just so undervalued right now. And I hold a very large position of it in my main portfolio, and then I have a position of it in this portfolio as well. Obviously, just $25, but this thing was up 10%, or not 10%. This thing was up $10.90 today. It was up 9.72%. This is a position that coming into the day we were actually down on in this portfolio, but now we are up a total of 5.2%. And again, in the matter of just 8 days, being up 5.2% is very, very exciting for me. Obviously, I'm wishing we had a little bit more money in this portfolio, but you got to start somewhere. It's a long journey ahead of us, but I think that BABA is just so massively undervalued. I think it's a stock that I'm definitely going to continue pumping money into in both this account and in all of my other portfolios and everything. And I think this one just has so much potential, so much room to run over the future. This is really, in my opinion, going to be one of my big winners and a stock that has a chance, to make me a lot of money. But as far as what's going on with them today, why Alibaba stock bounced back today, recovering from a 3-day sell-off. Alibaba bounced back big. Alibaba's bounce back appears tied to a Bloomberg report yesterday that the company is weighing options to dispose of its 30% stake in Weibo, which is the Chinese Twitter, and may sell its Weibo shares to a state-owned firm. So you might be wondering, okay, what the heck? What does that have to do with the stock bouncing up? And again, part of it is that the market as a whole had a very, very good day today. We saw a lot of these companies rising up, just like I talked about with Neo. Baba was absolutely caught up in that, but some companies were up like 2, 3, 4, 5%. Not every company was up 9.7%. So, there's obviously something at play giving Baba that little extra jolt. Part of it is again, I do think they're very undervalued as well, so I think they're susceptible to big jolts, but what's going on here is that there's at least a couple reasons why Alibaba could, sell Weibo, and obviously one of the reasons is money. With more than $72 billion in the bank, Alibaba isn't hurting for cash, and that's another reason why I love this company. You have so much cash on hand; they're going to be good to go for a long, long time. The free cash is just crazy. Alibaba isn't exactly hurting for cash. It generated more than $24 billion of new free cash flow over the past year. Nevertheless, selling this share in Weibo is valued in excess of $7 billion, and it could generate as much as $2.1 billion new dollars for Alibaba to deploy. And even for Alibaba, that's not nothing. And perhaps even more important is where Alibaba might deploy that cash, specifically whether it might put it in places other than social media, because again, social medias usually aren't that exciting. I mean, if you're like a Facebook or something, or a YouTube, that can be pretty crazy. But, being the Chinese Twitter already isn't even that exciting of an investment in the United States. One of the bigger social medias in the world, Twitter struggles to, monetize its site, struggles to make money, struggles in a lot of different areas and aspects. So owning Chinese Twitter, while you can get a lot of, users and interaction and stuff, kind of hard to make money. So spending, cashing in on a couple $1 billion and then being able to spend it on something that's not Chinese Twitter, because again, it's tough, but also there's a million other problems that go along with it as they get into it a little bit. Weibo is the most influential and controversial of Baba's holdings. It's been the center of multiple political storms involving Chinese government censorship of the post to the internet. You might recall, for example, the Chinese tennis star and the star's subsequent disappearance that marked an international protest against the Chinese government last month. China's constantly tightening controls over free speech, and they're even considering an outright ban on private capital participation in media. So there's just so much bad stuff attached to Weibo that Alibaba, especially at a time period when they're trying to get in the good graces of the government, selling off Weibo, their stake in Weibo, to a state-owned firm, could ultimately be a good decision for a lot of different reasons. And again, I don't think this is the main reason why Baba's up 9.72% today, but I don't think it hurt. I definitely think it helped and is at least some factor of why they're up so much. Now, again, I still think this stock has a ton of room to run. I think it has a ton of room to go. I'm glad that it had such a big day today. I'm very, very excited, and I'm glad to see that my portfolio is up overall. We had a very, very good day today because previously I believe we were actually down. But right now, all 4 positions are in the green. Things are doing good. And yeah, that's pretty much it for this video today, guys. So definitely drop a like if you did enjoy it. I'd appreciate it so much. Leave a comment down below. What stocks are you guys considering buying? What stocks should I, consider buying in the future for this portfolio? I'd love to hear your guys' thoughts and opinions. Subscribe to stay up to date on all my latest content. Consider checking out my Patreon, first link in the description below. Hopefully catch you guys in the next one. But until then, peace.